generation digital financial services are. And we have Bill Genovese, who is about to join us. And Bill, if you can click on your camera. Bill's an internationally respected CIO and CTO, and he's lived and worked across all the major continents of the world. He possesses a considerable and in-depth multicultural awareness as a result from working in all those different countries. Over the course of his career, he's amassed an impressive track record and probably gets quite a few phone calls from people to come in and help him grow revenue, deliver next generation digital solutions, and optimize the operations. He's an innovator, is acknowledged as such, and he actually has not just in the digital space, but he has how to help and apply quantum computing, AI, blockchain, and next generation analytics and computing. And there's no room in his head for any more knowledge when you put all that together. So Bill is going to take us through next generation digital financial services. Without further ado, Bill, I'm going to disappear, but of course I'll be in the background and the presentation is all yours.
Very good. Thank you so much. Can you see my screen okay? Yes?
I can see your screen and I can see you. That's fantastic.
Okay, very good. So next generation digital financial services, I'll explain what this is and how the industry vertical is more or less not staying in its traditional own swim lane anymore. And I'll share my experiences and some of the trends and some of the underpinning technologies that are shaping this space. My introduction has been well covered, just a bit more detail around it. I am the former Vice President of Corporate Strategy for Global Banking and Financial Markets for Huawei Technologies in Shenzhen, China. Oops, let me get this out of the way so I can see what I'm reading here. Okay. I've also, sorry about that again. Okay, I've also worked for IBM for well over a decade in a number of continents on the planet. 27 years in the space at the intersection of IT and financial services. I've done a bit of work in M&A, okay, for a company called Crosslake Technologies with private equity firms as our clients, and performing due diligence and risk assessments for buy-side and sell-side transactions in the acquisition space. I came into my career from banking, Wachovia Bank, which is now Wells Fargo, and I focus on really what's coming next around the corner. You know, what's going to displace traditional legacy stovepipes of technology and platforms. And typically what I'm seeing are the trends in underpinning mobile digital financial services and underpinning that blockchain, AI and analytics on the edge, and then quantum computing as well. I've also worked in real estate, telecom, and the healthcare sectors too. So if we kind of look at next generation technology, okay, next generation digital financial services, it's not one technology. The message here is not one technology supplanting or disrupting certain functions, okay, within the industry sector, okay. It's really what's happening is kind of a convergence of technologies, or the basket of technologies coming together to further accelerate adoption and use cases, and move things into production environments as well. So here you kind of see on the left side and the right side some typical functions of financial services in a number of areas: front office, back office, operations, and they're mapped to certain technologies, okay. Digital transformation as a whole, okay, which can be used as kind of an umbrella, or viewed as an umbrella. And underneath that, you have advanced analytics, Internet of Things, AI, the intersection of AI and blockchain with smart contracts, okay, and then robotic process automation. So you can see these are overlapping circles, and that's the first message I kind of want to leave you with is to really grow adoption and accelerate digital transformation. It's a convergence play amongst these areas, and the companies that are doing this are really starting to move the needle forward in terms of digital financial services. If we step back and kind of look at, you know, the function of banking and the evolution, you know, starting on the left side with informal banking and then all the way to the right, ubiquitous or embedded financial services and supporting financial services as a lifestyle embedded in your life. To some extent, we're returning back to the future. I mean, with informal banking, nascent currency trading systems, well, that's crypto. We're looking for alternative or decentralized finance. Okay, so moving from banking as a product through the evolution and the time frame to banking as a service to banking as a lifestyle. It used to be to do anything with financial services, you had to engage your bank or go to the bank branch, take out a loan or a mortgage for a new property, apply for a credit card or a checking account. We've then moved kind of into banking as a service where all of those products were offered to you in an omni-channel context, which is via the ATM, which is via the bank branch, which is via the internet browser, multiple relationships across multiple channels, okay, in terms of access points. And what's further enabled that is plug and play and open banking and APIs. We are now moving into multi-channel though, where the digital financial services are a utility embedded in other industry platforms such as e-commerce, Amazon, okay, and other retailers, okay, even in Europe, postal banks, okay, the German postal bank is now digital. The Swiss postal bank is now digital. So you don't have to go to the post office and pay your utilities. You can do it all online, as well as have a drill back to transactions you made from e-commerce platforms. So it's very quickly becoming embedded and ubiquitous in your life. And what's fueling that is this convergence of technologies, embedded microservices, AI, IoT, and cross-industry business integration and new business models. Excuse me. So when we talk about digital financial services and how this space has evolved, it's really based on, to some respect, illustratively, Maslow's hierarchy of needs. And this was fueled even further by what we just went through, and in some extent are still going through with COVID the last few years globally. Payments, the biggest example of a fintech disruptor is PayPal. Okay, they're no longer staying in the disruptive lane of payments. They're offering credit and other products now as well. Cryptocurrency you can buy from PayPal. So it started with payments because we need to pay for things digitally when we're cooped up in our houses in quarantine, and we need to pay right away from mobile devices or a browser. Through any of our payment methods that we can bind to the back end and retailers and food delivery services, what have you. Payments is the first thing that we need to kind of take care of in our lives. Digital disruption in terms of financial services has moved then into remittance, sending money cross-border to loved ones, okay, through digital channels. When we don't have enough money to pay pay for our goods and services, or send money to loved ones, we borrow. So digital lending, credit, okay, we don't have time. We can't jump in our car and go down to the bank branch and wait 7 days or 5 days for a loan approval. Microfinance, smaller amounts. So micro lending through digital channels. And then really the last two pieces, which are starting to be disrupted more and more now, is the preservation of assets through deposits, insurance, and investments. Okay, and this is also being digitally offered now through mobile devices and internet browsers as well. Robinhood is a good example. Acorn Stash on investing without even having to deal with a broker anymore. What's kind of changed everything in the industry, notwithstanding COVID, okay, but it's been moving in this direction, and COVID has certainly accelerated it, is the sharing economy. We're working from home. We have mobile devices that are kind of tethered to our hands and wrists, and we expect to do everything from that endpoint, that access point. This has fueled new business models, okay, where traditional industries are not staying in their swim lanes and they're moving into different adjacent industries. And then technology, which I'll spend more time on coming up, the underpinning technologies as well, that enable these, the basket of technologies that enable this digital transformation. Now, if you look at the traditional house of the industry, for lack of a better term, in the middle, okay, and all of the functions, okay, this is a bit of a different representation than the overlapping circles, but you'll kind of see in terms of the layer of the architecture functionally in the business architecture. And on the left side, you have non-bank disruptive entrants, typically consumer tech or e-commerce giants moving in. And then on the right side, you have the fintechs. Now, the common ground for disruption has been through mobile and the internet on the top of the house through the roof, just under the roof layer. Okay, and then they're getting in and disrupting it through multi-channel distribution and multiple processes. Now, the approach is a bit different between the non-bank big tech e-commerce giants, okay, versus the fintechs, okay, and fintechs are typically disrupting at different edge points in terms of specific functions, whether it be wealth management, payments, investments, or credit, okay? Whereas non-bank entrants, the bigger companies are coming in more holistically, okay? They're looking to offer deposits. They're offering credit cards, Apple credit card. My former company employed Huawei has a credit card now as well. But they're also leveraging their own payment channels through their software bound to their hardware device. So Apple Pay, Samsung Pay as an example. Okay, and the table stakes is really around the digital platform data and analytics in terms of harnessing that awareness and knowledge of the customer, their clients, their customers, and how to become more relevant in their lives. So a great example is I'm a Wells Fargo customer, 19 years now. Okay, they have all of my history with them. But PayPal, I've been with a quarter of the time as a customer. And last year, PayPal started sending me unsolicited advertisements for credit. Okay, my traditional bank doesn't do that. Okay, PayPal does. They look to see my payment patterns and they have knowledge of me as a client and consumer, and they use that data layer to harness that and become further embedded into my daily life. Looking at it from an ecosystem perspective as well now, okay, what you see here, once again, internal architecture from networks, infrastructure, core systems, functional transformation, integration in terms of data with APIs, and then services around the periphery as well. And you see the various players here. The differentiation is definitely occurring in terms of transformation in the area of APIs, okay, and how those are monetized, okay, whether you're an API provider as a bank, okay, and you're opening your walls up to provide API access to your data and information, okay, or an e-commerce player, whether you're an API integrator, okay, and you offer banking as a service and you're integrating other APIs from other institutions, okay, or you're integrating, you're aggregating and integrating APIs as well, and you're buying and selling them as a broker almost. And there's different monetization schemes as well. So paying developers pay you, freemium, and so on and so forth. There is some specialization in the industry going on now in terms of disruption on those inner layers. So core banking systems are moving to cloud-based or digital front ends. Mambo is a good example there. Ripple, in terms of Ripple XRP and cryptocurrency, its own network, Okay, so more work to be done there, but targeted and and disrupting SWIFT as well for remittances. So things of this nature. And then you start to get into around the outside, more specialized services, robo-advisors and services for investments. So in terms of the ecosystem, things are starting to shape up in some respect in a number of different ways in terms of modularity. Okay, so you have modular demand across the top of the chart and modular supply. So integrated financial services or integrated financial institutions, okay, challenger banks that are internet only, okay, other industries moving into the banking space, Gazprom Bank out of Russia as an example, Orange Business Services, which was a telco. And then you have, other industries kind of extending their front ends, okay, to become more integrated and get into financial services, more of a modular demand, okay, and then modular supply, lease financing or capital financing for assets, modular supply, and then fully modular fintechs and non-bank consumer businesses as well. Some of the music companies that are starting to move into this space as well. The key point is things are becoming much more embedded and ubiquitous in terms of financial services, and the lines of where you're dealing with a traditional institution are becoming more and more blurry. Now, I did quite a bit of research in this space, which I continually revisit and look at. And in terms of the initial research, the horizon was through this year, but even extending a bit beyond this, who are going to be the leading innovators in terms of business models for next generation digital financial services. And based on a number of surveys and polls in the industry and technologists as well, it came out where the leading digital e-commerce platforms were seen as being the biggest disruptors, followed by leading consumer tech companies, some fintech startups, I mentioned PayPal, challenger virtual internet banks only. Okay, so the banks that were kind of born on the internet with no branches. Players from other industries. They could have been global insurers moving into banking. They could have been telcos. Interestingly enough, what was voted last in terms of innovation were the incumbents, the incumbent banks. And they fell typically into two camps. Existing national, international banks launching standalone digital banks for adjacent countries and demographics. So Standard Chartered did this in Hong Kong with a new subsidiary internet bank called Mox, targeting the younger demographics, these Generation Z and millennials, but also keeping traditional branches in place for wealth preservation for the older demographics that like to go into the branch perhaps once or twice a week. And then you have those that are transforming either through a mobile digital transformation strategy or internet strategy. And those are good examples. There are Citi, HSBC, and China Merchants Bank, and deploying next generation technologies, which I'll get into. Now, in terms of fintech-oriented business models playing with the traditional industry, there's not one size fits all, okay? And it can be viewed as a continuum where traditional banks are collaborating with and cooperating with fintechs in terms of internal focus to external focus. And it could be a continuum or a journey from internal to external, or it could be any one of these slots along the way. And you see some examples there. So it could be starting as a digital capability center. So a traditional bank may want to build up a big data center of competency and work with fintechs to do that. It could be developing an incubator, an accelerator, and looking at interesting fintech companies to come in and partner. That could lead itself into formal partnerships as well, and JVs, joint ventures, which can then lead into a situation where a separate digital bank is created as well. Those that are on the mature external focus side of the equation may launch their own VC private equity arms. So they're investing in a portfolio, Standard Chartered Ventures as an example, a portfolio of fintech companies. What I've seen, which is really disruptive, is in certain markets, certain banking giants may partner together and cross-sell their products, their common products together on a platform or marketplace to fend off disruption from smaller entrants. So in a city or country, why don't we sell our mortgages together, okay, on one common platform to fend off competition in terms of digital lending or marketplace lenders from other platforms. So very interesting in terms of the evolution on where that external focus can wind up. In China, I spent 4 years in China, like I mentioned earlier. The cooperation there is not so much with individual fintech startups, but the banks are kind of partnering with the telcos, so teletech and big tech. Okay, so we did quite a bit of work with some of the China banks itself in developing innovation. Okay, and you see some of the other banks listed here in some of the areas that they've built out functionally innovation. Suning is a big electronics e-commerce company that has both retailers as well as online presence. So partnering there with them in terms of banking. But the message here is typically a merging and converging of industries and supporting technologies across these industries, mainly in the telco space, to have mobile first digital transformation. Now, if you look at priorities, okay, starting to get into more of the technologies in terms of impact, okay, and I mentioned some of this earlier, but really it's two slices, above the waterline or horizontal, okay, and improving knowledge of customer acquisition and their experience, open APIs, advanced analytics, machine learning, moving beyond dumb bots and smart bots, okay, conversational interfaces. And to a large extent, cloud is processing all of this information. To below that, which is more enabling technology for connectivity, data privacy, and security integrity, and computation and processing scale. So this is where robotic process automation, blockchain, quantum computing, AR and VR, okay, and Internet of Things, scaling digital transformation for the top half of the picture. Really, it came down to the technologies that I saw were the game changers in the industry as it shifts. Number one, you can't really have a digital transformation strategy or program without having some type of mobile experience, and ideally it should be mobile first. Okay, back to the 5 areas of digital financial services on that one chart I mentioned earlier in terms of consumption. You kind of see numbers around these circles. Okay, this is kind of a bit of a blueprint that we were looking at in terms of prioritization and how we brought the company forward horizontally. Okay, and we focused obviously based on our core DNA and technology innovation for mobile. Okay, and then tied to that as well, big data, AI, and advanced learning, biometrics, and adaptive security. Okay. As well, and that underpinning that in terms of connectivity with 5G. And then also a key priority is obviously if you're going to move outside your industry vertical walls, you have to have open APIs. Okay. It has to improve efficiency and get you to shared resources and shared business models. Okay. And then blockchain underneath for data integrity. and faster processing and more efficient processing to remove paper as well. Interesting chart here. So mapping use cases in terms of those digital accelerator technologies under the hood, okay, to those platform models I mentioned earlier on the chart with the examples. You can kind of see here how the outcome, okay. Most of it was centered on, across all of the platforms, artificial intelligence and analytics and data, okay, in terms of use cases. And then you'll see some of the other ones that were lower priority in terms of development, or they haven't quite had the uptake or adoption quite yet as well. High, medium, low across all of the various platform models. But once again, the key finding is AI and analytics across all of the platform models was a key differentiator in terms of how many use cases are being deployed, okay, across the industry. 5G, you know, once again, you can't have digital transformation without a mobile strategy. And based on some of the use cases, you start to get into advanced biometrics, facial recognition, virtual tellers, richer data, okay? It's going to require better connectivity, improved connectivity, which 5G is providing. In many countries around the world, they don't have to go through the journey of 2G, 3G, 4G, LTE to 5G. They're leapfrogging right to 5G and taking their digital transformation programs from a mobile perspective right along the way there. This chart is showing number of years it took for selected technologies to reach 1 billion users. So you can see the uptake and the uptick in 5G in terms of how fast it's becoming adopted, with 6G right around the corner as well. So I've spoken at quite a few conferences where, you know, it's perceived that, you know, 5G is driving fintech as an example. Well, not necessarily. Once again, if you have a digital transformation, you have to have a mobile strategy. And then all of the drivers for mobile, okay, in terms of bandwidth, latency, rich content, streaming, that will necessitate investment in 5G. So not the other way around. It's really fintech and digital transformation in mobile driving the investment in base business case for 5G adoption and deployment. KPMG, one of my former companies as well. This kind of shows the enterprise value of 5G across a number of industry verticals. You kind of see where financial services lies there as well, very much on the right side. And you know, the whole debate to a large extent, and also deployment models for smart city, okay, and you know where 5G would play in that. Smaller locations within a neighborhood or campus, a corporate business park on the left side, versus citywide use cases, okay, and what industry verticals would play with 5G in more of a citywide use case. Once again, this ties back to the embedded theme, financial services becoming embedded across a cityscape, or professional services and retail, versus where you would have more of a silo or section of a city with 5G, smart manufacturing as an example, okay. AI, you know, we've been through several waves of AI right now. We're moving more and more into autonomous AI. So that's what the chart on the left is kind of showing. And then the growth in AI in a number of areas, okay, across a number of industry verticals. So the point is it's becoming you know, more or less siloed or specific function to becoming, ideally, we're not quite there yet, granted, but becoming more generalized in terms of autonomous applications. In financial services, it's really kind of fallen into three functional areas: natural language processing, machine learning, and computer vision. Okay, so and these are all being deployed now. This is not something in the future. So financial services is certainly using these across the board, and they've become embedded in our daily life. So mobile check capture and deposit from your mobile device, computer vision, machine learning for fraud and risk management, portfolio optimization, especially with the next generation of quantum computing for portfolio optimization, and natural language processing as well, document analysis and contract building. Very interesting and currently in place now. In terms of the algorithms in place, okay, in the decision making, so this can become, more of a choice of rule-based decision making, Boolean data, simple pattern matching to actual machine learning based on complex behavior, moving towards autonomous vehicles or intelligent digital assistants. Definitely more work to be done there. We all know that after talking to voice assistants on phone calls. So, and these boundaries are becoming fuzzy, as we go from the statistical reasoning to full-on generalized artificial intelligence. Interesting chart that it kind of shows from a skill set perspective too, as people are working in this space, their evolution and their skills building from rule-based decision making and application development all the way through cross-platform artificial intelligence. Advanced biometrics is a key use case coming up for AI. Okay, it's being used in transaction monitoring, physical biometrics, transaction monitoring, and then behavioral is the latest view on that as well. So I remember going into the coffee shop on my campus in China, and there was a device right at the counter that looked like an iPad, and I would simply smile at that device to pay for my coffee every morning. It was bound to the back end to my Bank of China account, and very, very easy. But this is pretty much right now ad hoc and a bit chaotic. Okay, so we can opt in whether we want to use facial recognition for any amount of money, small, medium, or large. Okay, the opportunity here kind of ties back to transaction integrity and thresholds, and potentially that can trigger whether facial recognition and advanced biometrics comes into play or not. Right now, it's kind of up in the air as a cooperation or an agreement between the bank, the hardware vendor or device manufacturer, and software provider to some extent. A lot of room for improvement here in terms of when to institute it and under what behavioral circumstances. So it's still definitely an area of ongoing research, investment, and application. Quantum computing as well, 3 types: quantum annealing, which performs specific functions, okay, simulation, which is really looking at problems in business where a traditional algorithm may not be the best fit from AI, but a quantum algorithm may be a better fit. And then we're years away still from universal quantum. That's a bit further down the road, without a question. Very large amount of qubits, and IBM is already kind of operating in this space right now, but very specialized use cases. Getting to the use cases too, in terms of maturity, you see use cases here, not only financial services, but some of the other ones in terms of short, midterm, and long-term horizon. Okay, so definitely I see in financial services, portfolio optimization, consumer offer recommendations in terms of products, disease risk predictions down the road. These are all optimization problems as well. Okay, a good part of them, as well as the combination in terms of hybrid architectures with AI and machine learning, but then also feeding into that a bit is scenario simulation, which would then lead into some optimization scenarios using quantum computing. A lot of research organizations, this came from McKinsey, feel financial services is going to be one of the biggest verticals, okay, in terms of value for quantum computing, followed by material science and energy. So less on the consumer side. That's a bit further away in terms of universal adoption and usage. So very specialized functions that are having optimization problems or scenarios leading to predictive analytics, best fit solutions. A number of companies in the ecosystem. So you have quantum development kits, partnerships with startups, the latest cloud-based offering in terms of subscription, quantum computing as a service, along with blockchain and AI. Now you have quantum computing as a service. Companies are starting to offer that. And then there's a handful of companies that are actually building quantum machines and hardware. And then finally, moving into blockchain. Blockchain is not one single technology in terms of the layers. You have the application layer, services, platform, consensus. Last count, I think there was 70 some odd, upwards of 80 some odd protocols in terms of consensus, how the settlements are occurring, okay, and based on different use cases and the participants in terms of the consensus. You have the data layer. And then you have the network layer. I feel most of the work that still needs to be done is at that network layer. If you look at the old open system interconnect model, okay, the 7 layers there in networks, really blockchain technology is only touching the top 3, but down to the packet and transmission layer, there could be more specialized networks that are put in place for blockchains there. We had built out some proof points. If you're going to bring blockchain into the enterprise, this was a framework I developed, and I have not come across any company yet that's delivering blockchain that has met all 5 of these simultaneously. Now, a lot of focus on 1, 2, or 3 of these at different points in time for different customers, but not all 5 simultaneously. And to really displace legacy infrastructure and systems, this really needs to occur all at the same time. And then looking at, once again, blockchain for certain industry verticals, you can kind of see where the uptake is. Retail and e-commerce is a big growing space as well. Payments as well, underpinning payments and cross-border remittances, which leads into the next chart. So this was a surprising chart. Most of the use case, okay, a couple of years back, and this is shifting a bit, but still largely still the same, has been in cross-border payments and settlements, supply chain finance and trade finance. Okay, there's some in identity management, asset and goods management, real estate, but a good 48%, nearly half of it, is an amalgamation of other use cases that are one-offs. So cryptocurrency, I'm not going to spend, we're getting near the end of my time here. Cryptocurrency is still a bit of back and forth, up and down, but it's definitely here to stay, and more institutions are certainly investing in it from the traditional financial institution perspective, okay, and looking for actual use cases for it, okay, that are used beyond cross-border remittances and where you can pay for things using cryptocurrency. More and more institutions are accepting payments in that regard too, though, which is a shift. And then programming languages as well. Okay, so what's occurring across the estate? Popularity is based on tutorials searched on Google. So Python and Java are pretty much up there quite a bit. TIOBE is a community index. C, Java, and Python. See, it's more of a traditional language. Okay, so you see some differences there. Okay, based on engineers and developers and what they're using. But definitely Python is certainly creating a lot of noise in terms of its popularity growth. And then GitHub in terms of commits. How much code is being developed and distributed to GitHub, which quite a bit of developers use. And got JavaScript, Python, and Java are the top three there. So, and then you see some of the older languages that are starting to die down, tied to legacy infrastructure, as an example. And then another example of convergence to end this up. So this would be IoT and blockchain integration. Okay, in terms of smart contracts, kind of a farm to table example of food distribution, farm, transport, store, and then business applications, both from IoT perspective and a blockchain peer-to-peer network. From the food producer to the logistics company, retailer, it could be the new Amazon Go supermarket, and other third parties that would be involved. And then taking this all together, what does the next generation really look like through three stages of evolvement, or two stages: minimal human system intervention to zero human intervention system. And you kind of see in the center the convergence of IoT, AI, and blockchain with smart contracts, and then an inference-based controller based on semantics. So based on the use case, that will invoke which layer of the architecture and where to converge through those interfaces. Very interesting. And then what's fueling that is the common dataverse, which separates out the semantics and the inference. So probably not too far from reality if you kind of look at what's going on in the world and where technology is evolving. And that's all I had for now. Quite a bit to digest.
Yes, that is true, Bill. It is quite a bit to digest. Look, we've got about a minute and a half here. So if you can stop sharing your screen, it'll take the black that'll go away. Perfect. So let me just ask you one question, because there's so much in that we could go off into all kinds of different directions. That was an incredibly data-rich presentation. If you just had to say one thing, what do you think the next industry that is likely to be disrupted by all of this in financial services? What do you think the next big breakthrough is going to be?
After financial services or within financial services?
Within financial services, sorry.
I would say investments. Yeah. Investments
meaning like buying stocks and bonds and equities, or
yeah.
I mean equities and bonds?
Yeah, wealth management overall as an umbrella, okay? And the reason being is due to alternative investments. And I'm saying cryptocurrencies and alternative asset classes, okay? There's a propensity from a consumption model perspective and access perspective, quite a bit for mobile and internet access to these. Okay, so that's going to kind of tie back to my point earlier. Okay, that if you're having, if you have a digital transformation strategy, you need a mobile strategy. So, and my money has been traditionally kind of spread across a number of traditional brokers and securities firms, as well as Robinhood, Acorn, Stash, so on and so forth.
Right. Very interesting. We're out of time. I was gonna ask you a big question about digital currencies and the central banks, but that'll take us down the whole.
Oh yeah.
Is the Fed ruining the world, or is the Fed saving the world?
Another 45 minutes. That's why
that's a whole other session. I personally think the Fed is ruining the world, but that's just my opinion. Anyway, Bill, thank you very much for a fascinating journey all around the wild new world of technology that's expanding, touching on just about every part of this industry. And I thought, as a bonus, you talked about several other industries where the technology is being involved. So for anybody who has got multiple interests, I think you covered a lot of those points. So I want to let everyone know you can reach out to Bill Genovese. You can find him on LinkedIn, and you can find him with his contact details with Proqis. Bill, thank you very much for a fantastic session. I'm sure I will see you again on another one of these sessions. Everybody, that's the last session for the day for BTOES or the Business Transformation Operational Excellence Summit 2022 from Proqis. I hope you will join us at another event sometime in the near future. Again, my name is Christopher Hodges. You can find me, if you like, either at nobleautomationnow.com or chris@nobleautomationnow.com. But I hope to see you at another Proqis event, either live, preferably. I think there will be an event in Chicago that'll be live, another event in Orlando that'll be live. It'd be great to get us all together, exchange ideas, both while someone's on stage and when we've got a cocktail in our hands in the reception, talking about all these great ideas in an informal setting. I will see you in Chicago, Orlando, or virtually. Thank you. That's all for now. Take care. Bye-bye.